Good morning, this is Graham Bibby on the 2nd of September 2016, and today I'm going to do a specific and specialized Camtasia to you on one of the components and one of the areas we're looking at in my Insiders Club special situations, and especially in the mirroring account. That's an account where you mirror positions that are taken in a smaller account for more aggressive returns. So today I'm going to talk to you about the potential of uranium and why I believe one of the biggest bull markets may be coming in uranium. I know the fundamental reasons behind this, and if you're interested in that, you can email me at ceo@richmondth.com and I'll send you some information on that. But today I want to talk to you a bit about charting and how markets move, what makes markets move. What makes markets move is simple. It's supply and demand. If more people want to buy a stock or a metal or even a property at a given price, then stock that's available, they then start to bid the price up. So for example, if you can't buy something at 100, you'd then try to entice the buyer to sell to you at 102, 103, 105, and then off starts the uptrend. And if there's too much stock available at 100, so you're trying to sell it and you can't sell it, you then try to entice people by saying, look, well, I'll sell it for 98, I'll sell it for 95, I'll sell it for 90. I don't know if you've ever, bought or sold a second-hand car, for example. People come along, negotiate the price down, generally speaking, and as you get two people interested in it, and then you might actually get your asking price because two people are competing. Same in the house market. Anyway, here's Uranium Energy Corporation. Now, this is one of the most low-cost producers of uranium out there, and I just got a chart here going back. This is my little arrow floating around here. I've got a chart here going back to June of last year when this particular stock was $3, and it went down over here in May to something like 70 cents. Difficult for you to see here, but there is a line which goes from there all the way down to here. And that is a downtrend line, and what that means is every time the stock got to this line, then it declined again. And here it broke out, so that means it broke that downtrend. That was the first sign that uranium, in this particular stock, may have broken out. And the bottom, we can see here, bottom, this is where no one wants to sell anymore. All the weak players have gone, weak holders of the stock have gone. The bottom is at this level here, you see. When it got to this level, boom, people are buying, people are buying, people are buying. It's a floor on the stock. So we broke out here, and I thought, hallelujah, we're on to the major bull market already. But sadly, we corrected back. I put stop losses at the last correction point we turned up. To me, that should have been the point of which we don't return, but we did, and we fell below that. Now, being the ex-chairman of the Technical Analyst Society, I know how charts can work. It's all probability and percentages, and sometimes when you get a breakout of a resistance level, this is a resistance level, this line here, you can actually break out like that and come all the way back down to that level again. So resistance on the way up becomes support on the way down. And okay, the support lasted. We went above this previous top, that circle there, came back, and this became the new stop loss level. So we went up, challenged it again, and boom, off we've gone. And I thought, again, this should be a start of a major move that way, but we've come back to test this top, this bottom here, which is now the support level. So support is around 99 cents to $1, 98 cents to $1, and when we see the breakout from here, this time should be the start of a major move. Now, if I go back a bit further, you'll see here that way back in 2010, this stock was trading at nearly $8, and this is what can happen in the bull run. This is 2008 until Fukushima happened. This stock then was 10 cents, and it went to $8. So that's not 8 times your money, it's 800 times your money. And I'm told that the shortage in uranium right now is bigger than it was back here. Back there, we had Russia decommissioning all its nuclear weapons, and therefore there was a lot of supply on the market. But we still had 800 times your money, and this time it's a lot worse than that because Russia has no more nuclear disarmament going on, so 15% of the market has disappeared, and the savage bear market we've had in the commodities sector is making this more and more acute. But when we get to a bottom like this, same as we're seeing in resources and gold and silver, you often get quite a bit of back pulling because people who held all the way from here and haven't got out yet, and most people have, who haven't got out yet, on any sign of a recovery of 10-20%, they just want to get out. They've forgotten that they bought at $8. They shouldn't have held it all the way down anyway, but they've forgotten that, and if they can make another 20% or wherever, from wherever they thought they had to get out, they thought they were going to lose all their money, they're so keen to get out. So this makes it a bit more clearer. Look, there's a downtrend angle. We broke out up through there at our stop losses here, and if we can start moving up here, especially above at 109, I'm really looking for this to happen, and if it does, we'll be seriously adding to our positions. Gold and silver have been going through a correction. If the smart money's correct, we're still going to be in a major bull, but we can't sit there looking for corrections like this when this went from 286 and went all the way down to, well, I think it was 70 cents. 65% downward move. If I'm telling you to hold on to your portfolio, you're 65% down, you're not a happy person. So this Graham Bibby, 2nd of September 2016, saying this is one of the things we're still holding in our here we go, boom, breakout. So stop loss now here, stop loss then there, and if we break out, this is one of the things we're still holding in the special sitch and still holding in the mirroring account, but I'm sure we'll be rebuying very, very soon, certainly in September, and the next move in gold and silver will be like the one we have from February to March, when a lot of those things went up 100% or more. Graham Bibby on the 2nd of September saying enjoy your weekend. Bye-bye.